Hello and welcome back to Data Driven Finance, brought to you by Envestnet Yodlee. I'm Mike Stiles, and my guest today is Steve Boms, who's founder and president at Allon Advocacy. He's also executive director of the Financial Data and Technology Association. Steve comes out of Penn State and has also worked at Capital One, the International Securities Exchange, and a little thing called the U.S. House of Representatives, helping out a senior member of the Financial Services Committee. And we're going to be talking about regulations and government relations and financial services. Steve, sounds like you've seen it all, done it all, so we really appreciate you taking out a few minutes to be with us today.
Delighted to be here, Mike. Thanks.
I guess let's set the stage by just learning what Allon Advocacy does. I get that it helps financial organizations stay on top of public policy, strategize around that, and work with policymakers, but how is that usually done?
Yeah, well, it started with the idea, Mike, that there was a bit of a disconnect. Financial technology companies are doing interesting, novel things that are unique amidst a regulatory and legal structure that in some cases is 100 plus years old. And one example of that is you take a statute like the Electronic Funds Transfer Act, which is meant to protect consumers from fraud from their checking accounts. Well, that was designed in the middle of the 20th century by Congress when ATM machines were first invented. And that's still the statute that we use today to protect consumers from fraud, which of course is now digital and can happen from state actors overseas. So the idea behind Allon was, how do we bridge that gap? How do we have fintechs engage with government in a way that informs government of all the interesting, novel, unique things that the financial technology sector is doing? But similarly, how do we make sure that the financial technology sector is aware of the expectations that regulators will have of them in this changing dynamic?
Yeah, it sounds like a process of a lot of educating policymakers and government officials and teaching financial organizations how to work through all those policy hoops. But what happens if a financial business finds policy and lobbying boring or distasteful and they don't want to lean into trying to craft and influence that policy?
Oh, Mike, I think they'd be in good company because lots of folks find it distasteful, but it's just a fact of life, right? I mean, you think of some of the most noble organizations and mission-driven not-for-profits in the country, organizations that are doing things like cancer research or children's health, they all lobby. Ultimately, the kind of fundamental underpinning of democracy is the ability for constituents, whether they're corporate constituents or individual constituents, to engage with their government. And all that we do is we help to facilitate that in a way that hopefully kind of bridges the gap between where policymakers are and where the fintech sector is.
And then the Financial Data and Technology Association, what is that? What is it trying to do?
It's a trade association, Mike. It's kind of one of the simplest ways of thinking about it is that there's strength in numbers. So an individual organization may not be able to influence policy on its own, but the strength of several organizations, particularly organizations that compete with one another in the marketplace, collectively can convey a lot more strength to policymakers and their arguments. And so FData is a global trade association. I lead the North American chapter of that global trade association. We've got about 36 different companies based in Canada and the US, all united behind the idea of open banking. And so Yodlee has been a founding member of FData North America since our inception, going back more than 6 years ago. And we have been advocating with the Consumer Financial Protection Bureau, with Congress, with policymakers north of the border in Ottawa, to prescribe an open banking regime here in the US. And as we'll talk about a little bit later on, we've made some pretty meaningful progress in that regard.
You know, I do have to confess that sometimes on this show, we talk about open banking as if it's some new thing that recent technologies are thrusting upon us. But the UK has had open banking officially in place since 2018 with a structure around it. Where is the US and the world compared to the UK? And as a leader in it, what has the UK learned?
It's a great question, Mike. This is one of my biggest frustrations in having these conversations with policymakers. You're right. The UK put forward their kind of legal structure for open banking several years ago. But the US has had open banking in some regard since the late 1990s or the early 2000s. Yodlee has been a company for 25, 26 years now, right? Kind of doing this consumer driven connectivity work. And so the US is meaningfully behind other countries like the UK, like many European nations, like Australia, like New Zealand, South Africa, Singapore, in having the government enact regulations and standardizing the way that open banking works. The US, though, is meaningfully ahead of other markets, including the UK, frankly, in terms of the number of fintechs in the marketplace, the number of users who are relying on those financial technology apps to improve their financial well-being or to manage their finances. And so the best way to think about what the CFPB is in the process of doing is to bring the regulatory framework for open banking in line with what all of these other countries have already done, even if the market itself has historically delivered a lot of that benefit in the US already.
Well, that's an interesting point. Who do we turn to get this kind of structure in place? Is the answer government, or is the answer an association like you work with and kind of a collaboration between players?
Well, I think from my perspective, the answer is government. Congress gave the CFPB this authority in 2010 to write regulations to provide a data portability right for financial services data to consumers. And the kind of glib way of thinking about it, Mike, is, we've had elements of open banking in the US for, like I said, 25-ish years now. If the market could have figured this out on its own, it would have by now. And so the fact that even in 2024, in the absence of this final regulation, data access with a consumer's permission is disparate. It's highly dependent on the terms and conditions that their bank has put forward in terms of how that data can be accessed and when and whether. The fintech that the consumer is deciding to use may or may not have certain data privacy or data protection processes in place. It's a very difficult market to get kind of a uniform access to and uniform protections in. And so when there are market failures like that, the only entity in the US that can address those holistically and unambiguously and uniformly is the government, which is why FData, and I personally am so excited that the CFPB is expected to finalize an open banking rule later this year.
Is it a matter of lack of education or lack of motivation or some combination of both that prevents government from moving a little faster on this than it has been?
Yeah, I guess that's a nice way, Mike, of saying Dodd Frank was passed into law in 2010 and it's 2024 and we're first talking about the regulation being enacted this year. So why, right? What's happened during that intervening period? I guess a number of variables, right? Number one is, as is the case with any regulator or any government, there are competing priorities, right? A lot happened during that 14-year stretch. I think number two is the regulator, in this case, the CFPB, did give time to the market to see if it could figure this out on its own. In 2017, the CFPB they published a set of non-binding principles for consumer-driven data access. And they waited. They waited a couple of years to see if that solved for some of the issues that consumers were having in accessing and sharing access to their data. It didn't. That then led to a process of, I wouldn't necessarily call it education, but collaboration, where the government through the CFPB put out proposals for stakeholders to react to, solicited public input, comments, feedback. They're kind of at the tail end of that process now. And we will get a final rule sometime later this year that creates that regulatory framework for open banking. So I don't think in the US, I think it's fair to say that government doesn't typically move fast. In this case, it certainly hasn't, but it has moved methodically and thoughtfully. And in my own view, I think the rule that we're going to see finalized in the next several months here is going to reflect that the CFPB has taken input over a period of years on this really important issue.
When you yourself think about open banking and connected finance, what's your idea of the end game? What does it look like once we've gotten it right?
Yeah, that's a great question. And I think, Mike, in my view, I don't know that there's, the tape across the finish line where we'll all be able to say, aha, we've reached it. I think it really is an iterative, ongoing process, not unlike, how do we know when we've gotten the financial services infrastructure right in the US? I think we always have to be striving to improve it. So some of the metrics that I'll be looking at are how many users does the open banking system have? Can we measure the uplift in terms of data privacy or data security protections that this regime has put in place versus the status quo that we have in the market today? Can we measure consumer outcomes, consumer financial outcomes, and see, for example, how much in fees does the open banking system save consumers each year? Or how much additional interest can consumers earn by moving their savings accounts to higher interest accounts? I think those are the things that I'll be looking at. But even the CFPB, in the proposed rule that they put out late last year, even they acknowledged they're going to do additional rulemakings to expand the scope of accounts covered under this regulation over time. Because the nature of financial services, the nature of technology is it's always changing, it's always evolving. And 20 years, 50 years, 100 years from now, we probably won't be using our mobile phones and managing apps that way. There'll be a new technology platform that we're using, and we have to make sure that the financial services system is keeping up and meeting consumers where they are in terms of where they want to be banked.
Isn't there kind of a push-pull in that today's consumers, they want access to everything that technology can do for them in financial services, but they're also still skittish, at least some of them, because they want safety, security, privacy, etc. Will those two desires always be at odds?
I don't think so. No, I don't think so. I think there is a way to have consumers give them their cake and have them eat it too. The underpinning of any well-implemented open banking regime is transparency. So I, as a consumer, when Steve wants to sign up for a fintech app, I deserve the right to understand how much data is being collected about me. What specific data elements is being accessed? How long is that data going to be held? What are they going to use that data for? How do I get that data request withdrawn? How do I opt out of future data requests being made on my behalf? And that combination of disclosure on the one hand and then control on the other fundamentally puts me in the driver's seat of choosing how my data is used, who it's shared with, and protects me against negative downstream implications. So I think there is a perfect world where we can marry those two things together. But I'd go back, Mike, to what I was saying before. I think it will always be iterative. I think one of the lessons that US policymakers can learn, certainly from the UK, but from their counterparts in many other jurisdictions that have moved more quickly, is they're not going to get it 100% right the first time around. And the US regulatory apparatus has a long track record of taking a long time to write rules, and then generally speaking, only periodically reviewing those rules years and years and years after they've been finalized. In this space and in technology more broadly, I think that culture has to change a little bit. And I think there has to be an openness to saying, we're going to write a rule, and maybe it only gets us 85% of where we were hoping to be, but that's okay, because we can go back and revisit that rule 6 months, a year and a half later, and maybe we'll get another 7% of the way that we want to be, and continue to iterate on that over and over and over again and address issues where they live.
Well, let's talk about the data because obviously, open banking, connected finance, it's not going to happen without data. It's the lifeblood of any talk about those things. Do regulators approach financial data kind of the same way as they try to protect medical data? I mean, how do they view that data compared to other forms of data and in other industries and verticals?
Yeah, great question. There are definitely similarities. And so medical data and financial data are the only two types of data that have federal protections provided to them under acts of Congress. So HIPAA for medical data, and then the Gramm-Leach-Bliley Act for some financial services data. There is a general view in Washington amongst policymakers that financial and medical data are some of the most sensitive data elements that a person has associated with them, both just because of the level of sensitivity associated with that being made public, but also because of the bad things that can happen to you if that data gets into the hands of a bad actor or somebody who wants to commit fraud. So I think in the case of open banking, having existing data privacy frameworks in place for financial services allows it to be one of the first verticals in which an open data ecosystem, open banking, can move forward. And we've seen that in other markets as well. So you look at, for example, Canada. Canada is also moving at pace to implement an open banking regime. But in Canada, it's part of a broader effort to provide consumers with an outright fundamental data portability right. Doesn't matter what kind of data it is, it's your data. You get the right to access it and share it with whomever you want. But they're starting with open banking. And they're starting with banking because there's already protections and frameworks in place to protect that data as it exists today. The same is true in Australia. Australia enacted a consumer data right several years ago. But the first use case that the government is looking to use to build on that data right is bank data, is financial data. And so it helps to have that framework in place for financial services data. There is kind of a utopian view in the US that at some point in the future, and who knows how long it is between then and now, that the same framework that will be delivered shortly for open banking will be delivered for all sorts of data, that your data belongs to you no matter who holds it, no matter what kind of data it is. And it should be seamless for you to share access to that data electronically with anybody you want, provided they meet certain data privacy and data protection requirements.
So let's say I'm a consumer, and I am. Open banking is connected finance, that's happening. I've given data permissioning to make all these wonderful things happen for me. How does the consumer benefit? I mean, are fees really going to go down? Will it really be easier and faster to apply for and get a loan? Is banking really going to be easier for consumers in revolutionary ways?
I certainly hope so, Mike. I mean, look, the fundamental underpinning of the argument for open banking is more competition breeds better consumer outcomes. And although we have a vibrant banking system in the US, we have something like just under 10,000 financial institutions in the US, the fact remains that it's a highly, highly concentrated system with the largest handful of banks controlling the majority of consumer deposit accounts. So in a world where it's easier for a consumer to, say, have a checking account at one institution, but have a mortgage through a fintech or have a credit card through a third party, and they're not necessarily captive to the financial institution with which they have their primary banking relationship, yeah, fees do go down. It's the same principle that we've seen in terms of savings accounts. When branchless savings accounts were launched, we've seen interest-bearing accounts in the savings domain go up significantly for online-only banking accounts. I think one of the areas where this is most kind of easily seen is in the payments space. So when you look at like international remittance payments, historically the fees of sending money overseas, for whatever reason, have been pretty high. But with open banking use cases, we started to see those fees go down significantly. Same is true in terms of like brokerage accounts. It used to be, I'm sure we all remember the days when if you wanted to buy a share of Amazon or name your public company, you paid your broker $15 a trade, right? When online brokerage accounts popped up and they weren't connected to kind of the incumbent investment houses, you started to see commission trading go away altogether. So it's that same principle here, just at scale.
Well, putting on your advisor hat, what's the most important thing that financial services organizations and policymakers should know or be seriously thinking about?
If you're a financial services organization, you should be thinking about, number one, how can I take advantage of this framework that's going to come into place? How can I position myself to provide my users with better financial outcomes in a world where they have a legal right to share elements of their data with me or access to elements of their data with me. On the other side, you also absolutely should be thinking about how do I make sure that I comply with the regulations that are going to be coming into force so that I can get authorization to interact with this data. And if you're a financial institution, believe it or not, it's the same thing. So yeah, you're going to be a data provider, right? You're going to be an entity that holds data that consumers can share with third parties. But the dirty little secret of open banking, certainly in the US over the last 25 plus years, is that many of the entities that access this data with consumers' permission are banks. And so there's a tremendous opportunity for financial institutions here as well. If I'm a regulator, I don't know that there's really a ton more education that they need at this point, given we're in the very late stages of a rulemaking. But I'd be very curious to watch how the industry reacts to this final rule when it comes out. And to go back to what we were talking about before, I'd be thinking about how I can iterate on this rule in relatively short order to make sure it works the way that it was intended.
Well, Steve, that's really great stuff. Thanks again for taking the time to be with us. If listeners want to find out more about Allon Advocacy or you, what's the best way for them to do that?
Head on over to our website. We're at allonadvocacy.com, or you can always get me on LinkedIn.
Great. Well, we'll put those links in the show notes as well. And thanks again, Steve. And for you listening, don't forget to subscribe to the show, maybe even rate and review it, because that stuff matters. And if you want to see how aggregated financial data might be of great use in your business, visit resources.yodlee, that's YODLEE.com/podcasts. And we'll see you next time on Data Driven Finance.